Bitcoin emergency update. Everyone is wrong about Bitcoin. It is going to crash below $13,000 over the coming months, starting the big surge to the downside likely on Valentine's Day. So today's one that you don't want to miss because it's going to impact the entire market. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into Bitcoin. To really have an accurate view of the market, you need a methodology that allows you to look at this price action. I use something called Elliott waves. And one of the key things you want to know about the markets is it tends to move in fives and threes. And what I'm talking about, a five is 5 waves to the downside. So we got a wave 1, a little correction, 2, 3, 4, and 5. And what do we have with Bitcoin since the November top in 2021? Well, we have exactly that. We have this initial impulsive move down. We have a second leg up, which is a little correction. We have the next move to the downside. And with the new information available, this whole sideways move since June, looks like a classic drawn out ABC running correction. What that means is a 3-wave correction looking like this that makes up a wave 4. Now, this is important, really, really important. Why? Because it's unusual for a wave B to go below the beginning of a wave A. That just tells us that the selling pressure is strong. And it's also uncommon for the 5-wave structure of a wave C to not go above the wave A. That's why it's running. Now, what that means is if this plays out, it's probably going to be a big sell-off with Bitcoin over the coming months. And it's likely we're going to see Bitcoin go towards $13,000 to maybe even a $10,000 mark. How long will it take? Well, we can also analyze that as well. Now, if you want to keep a really close eye on Bitcoin, especially over the coming weeks, make sure you download my free Bitcoin report. What you'll get with the report is I do an update when there's valuable, important insights in terms of the price action. It's free. It's in a membership area with a lot of extra goodies. And when you sign up, it'll look like this. And if you just click on the latest one's always at the top. And I update this at least once a week as well. What I've also included, just to kind of get your head really in the game, is my trade plan on how I look at the market. And I highly encourage you to download this and then read it as well, because you're going to get a clear insight into the market and how we can really see what's likely to happen. So that's free. That's in the link below. So now when we're looking at Bitcoin with this, it's likely April is going to be the bottom, but not a long-term bottom. But we don't need to concern ourselves with that. April. Why April? Well, what we can do is markets tend to move in rhythms and cycles. And what we can do is we can look at how long did it take for this wave 1 to form in terms of how long in time. How long did it take for this wave 3 to form in terms of time? And then we can project those dates forward from this potential top, because it looks like there's a top over here, and project them forward. Along with some other low to low cycles, how long did it take for this low to form? And then this low to form, and project those dates forward. They all coincide in a nice little tight cluster. So this is the price and time target for Bitcoin. Now, sometimes it's incredibly difficult to ignore the noise because the FOMO is kicking back in. We're seeing altcoins, low caps pump like crazy, 500%, 1,000%, 1,000%. It's insane. But we want to be really, really mindful. So I just want to double down on this particular chart pattern because one of the key things you want to do as a trader is have your strong methodology and then ignore the noise. But it can be difficult because if you're watching multiple people and everyone's saying something slightly different, some people are saying really bullish, the bull run has begun. Some people are calling this the bottom and this being the first leg and then the market to continue, which is a possibility. However, what we want to concern ourselves with is really uncommon, like almost never occurs, where the market ends in a 3-wave move to the downside. This is a 3-wave move to the downside. Markets tend to move in 5s and 3s. So it's normally a 1, 2, 3, 4, 5 to finish off a trend. Here we don't have that. What we have instead is this initial move up, this three-wave move down, which more looks like a correction, and then this five-wave move up, which is a classic A, B, C running correction. That's what it looks like to me. So I'm deliberately ignoring the noise, even the positive noise. This doesn't mean I don't want that to occur. It's just that I'm looking at it from what's likely to occur. So let's just finish up with this. I just want to double down on this part of the market over here. So just so we're clear and on the same page, Elliott waves can be quite complex. I like to use them in a practical, simple manner. Is the market impulsive? Is it corrective? Now, what we've had since November last year is an impulsive move to the upside. 1, 2, 3, 4, 5. That's what it looks like to me. But then if we zoom out and then we say, okay, this looks like a 5-wave structure, but a 5 of what? That's really key. And that's what we're talking about, 2 degrees of wave count. So now when we zoom out, we go, oh, it looks like, if I just change the color over here, it looks like an A, B, C. So in other words, it's a 5 of a C. But then you can ask yourself the next question. Now I'm getting a bit advanced here. It's one of the reasons in the free Bitcoin report membership area, I've also included some free basic Elliott wave training, just so you can kind of get to grips with some of this stuff over here. A wave C of what? Because there's normally a wave 2, a wave B, or a wave 4. And it looks like a wave 4 in the grand scheme of things because of what we've seen that's happened since. So if this is the case, then what typically occurs after a 3-wave correction is a continuation of the former trend, which will break the low, the former low. And how much buy? Well, the most common is something called an external retracement. Basically, is this price zone over here, $13,000 to around the $10,000 mark, and in this date range. Again, these are the previous swing structures that tells us the market is relatively predictable, and we can see that if we do get a downward movement, it is likely to be a 5-wave structure into at least this zone over here. The last thing I want to cover is that next week on Valentine's Day, I believe I have the date correct, is the next CPI announcement, Consumer Price Index. And major reversals tend to occur on those days. So what are we likely to see over the coming days, let alone the coming weeks? So if I just zoom in a bit more, is we have had a bit of a price surge to the downside. We're probably going to get some type of correction over the coming few days. And don't be fooled by this. Unless it breaks this high, is likely to just be a correction. And then the next move to the downside, maybe coinciding with the CPI announcement, is likely to be quite aggressive. Because if it is a running ABC correction, and we can only know in hindsight, but now we're looking at the information, because I'm looking to short Bitcoin and make a lot of money on Bitcoin, shorting the market, because this is how it looks, that the market is looking and feeling. What I would like to see to confirm this, get a bit of extra confirmation, if I can just pull this down here, just so we can clean this up as well, so we keep our relevancy of the market, is I would like to see the Bitcoin price. It has broken this low, but I would like to see it close at the end of today below this low over here. That will give us a bit of extra confidence that this high is going to hold. Again, wait for the next daily bearish reversal, which is a momentum thing, and then look for short trade opportunities for this and ride this wave. Then expect some type of correction and then the next move to the downside. It's highly probable. Now, again, anything in the markets, no one knows exactly what's going to happen, but this is the highly probable outcome based on pattern, price, time. We got the weekly momentum. Another extra thing that I dive into in the Bitcoin report is the dollar index. Now, the dollar index is the strength of the dollar. And what this tells us is that the dollar is increasing in strength. Why is that important? We've had this surge up, one of the biggest surges up in the strength of the dollar in a long while. It's because it has the inverse, the opposite relationship to Bitcoin. In other words, when the dollar is losing strength, Bitcoin tends to be gaining strength. And we've seen that since November last year. However, we've reached a key 5-wave structure on the dollar index, a 1, 2, 3, 4, 5. And it indicates that we're probably going to get either something like this move here, a move here, something like this, and then is going to continue to the upside. More than likely, something like this. If this occurs, that's going to increase our confidence in Bitcoin going through a deeper correction, because it tends to do the opposite of the dollar. And there you have it. So download the free report. I will be doing an update probably over the weekend. And when there's relevant, important information on Bitcoin where the high has been confirmed, and then we should look for shorting opportunities. And then the altcoins tend to lag by a week or two. So if we do get a big move to the downside, don't be overly surprised if we see a big sell-off and profit taking with a lot of the cryptocurrencies over the coming weeks and months. We're talking about mid-April for that bottom to be hit based on time cycles, price cycles, and momentum cycles as well as pattern. Let's finish on a quote of the day from my book. We're going to go with chapter 8. It is Henry Ford, and he says the following: "It has been my observation that most people get ahead during the time that others waste." Now, don't be confused. You are playing against other players. Markets are a zero-sum game, if not a minus-sum game. And what that means is for there to be winners, there must be losers. And why is it a minus-sum game? Is because you're paying fees, whether it's your brokerage fees, your gas fees, your swap fees. There's all types of fees in there. So you have to be really, really sharp with the market. And it's about being consistent. And when the market takes off, and if that trend takes off, especially to the downside, the sell-off can be strong, and we need to be ready for the early stages of that market and then to compound into that position, because one real big trend can make your whole year when it comes to trading the markets.